Hey guys, Mike here. So we got a big storm in Florida here, and I normally film in my sunroom for people who usually don't watch, and I'm not going to move all that equipment in. So I thought, you know what, there's a lot of stuff that happened today that we need to talk about. So I wanted to put a video out to you, and so you won't, I don't think it matters if you see my ugly mug or not. So some of you will be happy about that, but I still want to put a video out there to you and go over a few things. First of all, for those who believe the Bitcoin ETFs got approved. That's not true. SEC got hacked, and so those have not been approved. That's why you see crypto pump and dump right now, or over the last couple hours, that is, as this will come out by then. And the other thing was, here I'm thinking, and some of the members I were talking about this, that we actually completed the first 5 days of the year green. So I want to clarify this because right after I put the video out, I get this note from Stock Traders Almanac, which I subscribe to and stuff, and it says we missed the first 5 days being green by 0.1%. So I'm assuming, because that's what I was trying to clarify, because other sources tell me we were green, that I guess the real way is what you're going to do is go back to the last trading day of December, the closing price there, and then the closing price on the 5th day of January, and that's where you're going to measure from. Because if you measure from or some people say, well, no, it's the opening price on January 1 versus the closing price on January 5, because we're talking about the new year, right? And so according to Traders Almanac, though, we were 0.1% short. So let's see what happens, because that decreases the odds of having a totally green year. And of course, we're going to have our ups or downs. And so we'll see. Again, a lot of us were going back and forth, even in the comments on last night's video, going, man, I see some sources saying this, some sources saying that. So I'm just going to go with Traders Almanac and go with them and say, I apologize. We didn't hit it. We missed about 0.1%. Okay, so now we officially have that. So I guess it's going to be a doom and gloom year. I say that sarcastically, obviously, but very well could be. Now, something else to keep an eye on here is you want to know where liquidity goes, this kind of stuff. And if it's not going to stocks, where is it going? Well, as you can see, you got zero coupon treasury creation set records in December, right? So this means that this is what's being created. Does that mean it's being bought right now, right? So these are the bonds. Obviously, they don't pay interest throughout their life. They pay interest at the end of it when they mature. And a lot of people are buying these at record discounts. What's happening? So you see right here, zero coupon bonds. If you're wondering, don't pay interest during the life of the bond. Instead, the investors buy zero coupon bonds at a deep discount from their face value, which is the amount the investor will receive when the bond matures. A lot of municipalities and stuff actually issue this kind of stuff to build projects out, things of that nature. Some people buy these, as you can see down there, to pay for their children's college, things like this, because a lot of these don't mature to like 10, 15, or many more years later. And so that's interesting to see, how many of these will be bought up, and the fact that it's a record creation of them kind of surprised me a little bit. So not only do you got money market funds, which are still growing over 6 trillion, as you can see right here by this chart, that now you have zero coupon bonds, which a lot of money will flow into as well, I'm sure, because they're definitely going to be at a good discount now. And I just did a whole members video on this, which I just put out and a couple hours ago, and the research surprised me, because what are you hearing all over the internet stuff? Hey, man, all that money on the sidelines is just going to flow into the stock market. And when you look at a chart like this, you can't really see it. You're like, well, these are 5-year, windows here. I don't really see, like, what are you talking about? I can see where money, when this goes down, obviously money was taken out of it, but when's it going down? And so if you're making your bets, trying to think, when this money is going to come in, when it does come in, it does make a huge difference in the market. There's no doubt about that, but I think it will surprise you when it actually happens. So I wouldn't put all your money on this or anything thinking, oh man, it's going to come in anytime soon, really, to be the case, because the research even surprised me. So, yeah, I just wanted to put that out there to you. But again, now you got 2 places money is going to be going besides the stock market. And again, like I told the members, you don't have to have this money flow in to have the stock market go up. Why? Because we got all kinds of leverage we can use, right? Margin being one of them. And so that's another reason you'll see the stock market go up while money markets go up at the same time. Now, the big things that happened this morning, though, that started the market off red, as I told the members of the morning news brief, it was Samsung, first of all, right? They put out a warning about their profit coming up here in the 4th quarter. And what the company said was it expects its 4th quarter income to drop by 35%. 0.5%, which of course is far short of estimates as demand continues to lag. So of course that affects PC and the mobile sector and stuff. So that was a big one. And another one that got the whole EV sector down today was the growth. A report came out and said the growth in global electric vehicle market set to slow to 27.1% this year as a reduction in state subsidies makes the cars less appealing to buyers, according to the research firm, how do you say that, Canalys. The figure follows an estimated growth of 29% in 2023 at 13.7 million units when government incentives helped the adoption of EVs. The lower subsidies and higher borrowing costs have weighed on the demand at companies, including U.S. market leader Tesla, which slashed sticker prices last year. And I believe there was another report which I'll get to when I cover the Tesla chart. I'll show you that one as well when it talks about their cars. But this right here just got every single EV maker out there red, as you can tell right here. And so nobody was spared. Obviously, Tesla went down, and even the garbage companies like Workhorse and Nikola were down and stuff. But even the Chinese companies, they got hit by it. So that was kind of crazy. Now, what we need to look for in the S&P, and I'm going to keep it simple here. And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. And that's these two levels. Again, we're going to take this level by level. 4,800 or 4,791 to be exact, and then around 4,700 or 4,691 to be exact, right? Watch those two levels. We've been between these two levels since around December 14th, if I'm not mistaken. And so again, this is one of those things. I mean, this is a 2% range. And the reason why this is important is because there's your high, there's your low, right? So if we continue to struggle and start to sell back down, obviously that is a lower high. And then if we break that previous low, then now we have a lower low. So now we are in a downtrend on your daily here, right? And breaking very important levels, and more important levels to come below. But again, we're going to stick with these two levels because we have a lot of stuff coming up. CPI on Thursday. We have a big OPEX coming up, I believe, next week, right? And so that can unpin a lot of stuff happening here. And then, of course, the first quarter is always iffy, okay? And, when we look at this, obviously, with the moving averages, why are we struggling? Because, again, we got overstretched, right? You got way overstretched above these averages. Again, all of them are still pointing up on the daily. So long term right now, everything's still okay. But, when you look at it, I think, what were we at, like 11%? Yeah, like 11% stretched out on the S&P. We've come down, so now we're only about 8%. And then we look at something totally different like IWM. We're going to use the 8 and 21, try to see where this one's going. Obviously, it rode that 8 all the way up. It hasn't had a bearish cross yet. It's trying to turn back up, but obviously if that crosses, then yes, we're going to see more downside. All right, this is trying to consolidate this level right here where we're at right now, trying to get above that trend line and try to get that more as support, trying to get above that 8, even above the 21 now at this point in time. So we're using the smaller averages because we know this one got way overstretched from its moving averages and everything, and that bearish divergence is somewhat playing out. And what's going to really hold the key for IWM to me is going to be the regional banks, because it has a lot of them on there. And you can see the KRE here, which holds a lot of regional banks. It is sitting there, and it is just wedging right now, right? So it's going to have a big move, right? Whether it's up or down. It's already had one big move coming up, right? And it's setting in that fair value gap and stuff right there, setting on that trend line, just wedging up in there. And, like we said, when it got the bounce, it's sitting in that golden pocket, which is where you would normally see a bounce, okay? But if this breaks down towards the downside, yes, IWM will be heading with it. And that's the way it's going to be. And this is another one got way overstretched over those moving averages, okay? So that's key for that one. Tesla, you can see this right here. Another gap down today, again, partially on that news, which I told you, and I'll show you some more news in just a second, didn't help, right? But there it is, that key level, 231 to 233. Once again, we'll look at it from a bigger view in just a minute, but that is a key level. What do? We get another bounce, right? And then it just consolidates along that 233. Again, you got the 200, which is probably going to be up to that 231 level in about a week or two right there, but that's more support beneath. But when we zoom out here and look at this, why this level is so important, you can see going back November 13th now. So January 13th to make 2 months. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, dropped down below, came right back up, and then 10. So double digit times now, it comes down, it bounces. Again, when you look, that is a downtrend coming down right there on the hourly for sure. No doubt about that right there. And what didn't help Tesla was the fact that they lowered their range estimates as the U.S. regulators tightened vehicle restrictions and stuff. And basically what they did, because they had subpoenaed all this stuff, they said that Tesla was over, estimating the range and stuff like that, manipulating stuff. So again, you can take it and read this article all you want, but that didn't help, right? It didn't help, not one single bit. And I read the whole article, and it was interesting, But again, that and the other report that came out didn't help any of these guys, and that's just the way it is. Now, something that helped some stocks was, once again, here we are, upgrades. So you got upgrades coming out, and you got downgrades. I'll show you the downgrade, which was the fourth downgrade for this certain stock. But you see Amazon and Google. You got this place says, hey, Google's going to be at 170, and then Amazon's going to be at 200. I told you these were two big picks, and a lot of firms are picking these two. Because I think really more because they've been laggards more than anything else. But, you see Google is trying to get out of this little wedge right here it's been in. It's breaking above right now. That trend line you're looking at right there, that's the trend line from all-time highs right there. So it's trying to break above that. And again, the next move up, around 144, I think it's going to be tough to get through. And then, all-time highs is right there. It's not even that far away from all-time highs. What is it, like 8%? And then Amazon, same way. This one right here, you can see two good green days now. There's that trend line, which is now resistance. It ran into it like a brick wall, and that never fails. It was a resistance before, tried to turn to support, failed, and it's going to be resistance coming up through there. But again, a lot of big firms talking about Amazon and Google. And so, I think even if you pull the volume bars, money's been big money, that is, been flowing into these two. And so we'll see. And a lot of it has to do with, like I said, the cloud for Amazon, AI and all that stuff for Google. And so, and they have the cloud as well, but then YouTube and everything else raking in the money. And you can see, pulling up, on a weekly here, it has to get above that trend line. Once it breaks above that 158 is going to be brutal to get through. Okay, I've said it before and I'll say it again. Brutal to get through. Now, Shopify, this one set a new 52-week high right here. And while everything else has been going red, this thing right here has had 4 really nice green days to recover. Again, nice support now at 71.25, which is good to see. You look over, what is that? That is that fair value gap. It's a weekly fair value gap, what's left of it. And so we'll see. This is where we got rejected last time, and that normally what happens when you approach up there. You'll see a response down off of a fair value gap. So we'll see if we can finally get through that imbalance right there and mitigate it to start moving higher. That's what we got to see on Shopify. And there was some news. I just couldn't verify it, but it was because Shopify and Twitter already had a deal in place. And somehow it got put out again today. They got another deal put in place, and I couldn't find the source on it. It looked like it was old. And so maybe that's what pumped it today. Who knows? Roblox, this one we talked about probably last week sometime, came back down after finally breaking that anchor VWAP, which we'll look at where that came from. And, came down that trend line. That trend line has been going on since August 2022. Now it's trying to turn to support. You can see it was major resistance for it for a while there. And this is another one, just cannot get out of stage one. Just cannot get out of stage one. But again, starting to move up. We'll see, again, if it can get above that 8 and 21 right there, or they end up having a bearish cross or not. Again, the anchor VWAP, I believe, comes from the all-time high on this one. You can see with the moving averages, the 50s finally catching up because this thing got super overstretched again like everything else. 200 still trying to turn up right there. It kind of is somewhat, right? The 100's turned up, which is good. So, more longish term, is looking good if it can get a nice little bounce here. But again, now the anchor VWAP, which was resistance, will become resistance again. Okay, so just want to make sure we clarify that and keep that in place. But you can see, it's also at a good bounce level because we pull up a Fibonacci. I'll guarantee you that's either going to be the 50 or the golden pocket right there, and that's exactly what it is. So that's why you're getting a bounce there as well. And when I talk about moving averages, them hitting moving averages, fibs, that is technical bounces, okay? It doesn't mean they're going to sustain. It just means technically there should be a bounce there, and that's what happened. Now, PayPal, I believe this is the 4th downgrade in the last 9 days. So this year of 2024 has not been good for them, but it's powered through. Yesterday it had a downgrade, the day it had a downgrade, and it's holding up, which is actually a pretty good sign. You can see on this one, you do not want the 8 and 21 to have a bearish cross because you will definitely get a nice little sell-off. Right now, it kind of really don't know what it wants to do. It's just sitting at a key level right around $60 right there. And so this one definitely needs a bounce and not any more downgrades. Baba, hot mess. Again, I covered this because a lot of you guys requested. That trend line's coming back into play again. Here's a bounce right there. That makes sense, right? Because it's done it before. And so the one thing about this one, again, China's trying to come out with new stuff, but when their economic data comes out, it scares the brakes off people. And if you're looking at any Chinese stocks, again, I would never own them for long term myself. I don't mind trading them or getting in and out of them or anything. But if I was you, what I would pull up is the Hang Seng Index, right? And if you remember, you know about this because I already covered this. But, when you pull it, and I'm going to mark this line right there on $70. That's kind of the line in the sand for this one. If it loses 70, good luck to whoever owns it. But if you pull up the Hang Seng Index, which covers, mainland China and stuff, and Hong Kong stocks, right? This thing, I mean, that's a clear downtrend. It's a mess, right? But I would wait for it to break that trend line, at least break that trend line, because that's the way, and when this happens, you can go back and look at it, but that's how this one trades. It gets in these, super downtrends, and then when it breaks it, it goes on a nice run, which means stocks like Baba and other ones will be moving right now. But look at those moving averages. I mean, they're just, that is not good. I mean, that's not good at all, right? And so, again, you can keep, hopefully you get lucky or whatever, but I would just wait for it to break that before it goes on that nice little run. It may save yourself a little bit of heartache or whatever, but when you keep scrolling back, that's the case. I know, people keep DCN in, and hopefully, like I said, a friend of mine owns a lot of Baba, and I really, really does hope it moves up. I have nothing against it, nothing against people of China or anything else, okay? I just don't trust their government. Now, the only earnings to worry about tomorrow is going to be KB Homes, because obviously, we need the real estate market to bounce back. That's a lot of it contributes a lot to GDP and stuff, but they're just so expensive. Even though rates have been coming down, you need to see buyers stepping up, but a lot of people are still probably worried about recession and making a big purchase like that. Now, economic data, a lot of mortgage and oil data, I don't think anybody care about, but I think the only thing to really worry about or look at is the 10-year note auction, okay? And so, we'll see if that goes well. Anyway, just want to put that guy there to you guys. Again, maybe I'll be back in the video tomorrow if the weather ends up getting better. Anyway, hit the like and subscribe button. Really appreciate it, and I will see you tomorrow.